Hello. Yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. So in today's webinar, we're going to learn how to trade news. This webinar is basically just going to build on what you've looked at previously on the news trading. So I want us to build from where we left it previously. I'd like to say that this is my own opinion. This is my own approach. You may want to use it or you may not use it. Something which you have to be clear about is if you truly believe that you understand what I'm saying or you have your own personal strategy towards news trading, then you can trade news. But if you don't have any good strategy or you don't know exactly when to buy or when to sell when news happens, then it is better to stay out of the market when news is approaching. So 15 minutes before news, stay out of the market, close all your positions, especially if that news relates to whatever you're trading. Then resume back trading immediately after the news. That is like 1 hour after the news has happened. So the other thing you have to take note of is anytime a news happens which affects a given currency pair or a given currency, what normally happens is this: the price will revert to that direction, not immediately. That is, the price will go in that direction not immediately, but after some times, maybe some months or some 2 months, that's when the price will begin to follow the news which happened maybe like 3 months or 4 months before then. So just that the fact that there is news does not mean that the price will immediately go in that direction, but there are going to be signs that the price is likely going to go either upwards or downwards from this given point. So with that said, the other thing is you have to know how to use orders. On the MT4 there are several types of orders, like if you check at the top where you have new order, I don't know if they can see it, if you can see this point here. Whenever you click it and then you check symbols, the first option normally is symbol, the next one is type. When you go to the pending order, there are the types of orders where you have buy limit, you have sell limit, we have buy stop, we have sell stop, then we have buy stop limit, then you have sell stop limit. So what usually happens is this: anytime you like to trade news to avoid things like slippage, spreads, issues on entry, just ensure that you are using the pending trades instead of entering trades instantly. So most people would come, wait for when the news is just about to happen, then they enter trades on instant basis. That is, the person just comes here or somewhere here, and then they enter buy or they enter sell when the news happens. So when the price is showing signs of going down, the person would come and enter sell, click sell here. When the price is showing signs of going up, the person will come and click a buy, expecting that the price is going to continue upwards. So this is not the correct approach. I won't recommend it at all. The best way is have some script or some tool, or you can get it online for free, where just before news, assuming the news is going to happen in the next 1 hour, have some tool which will enter for you, will put for you a buy stop at the top of the previous hour. That is something like this. Assuming the previous 1 hour candle is here, this is the highest high and this is the lowest low. So this is when we expect the news to be happening. So you draw like a vertical line which covers the previous candle, 1 hour candle, and then you now have this point here as the pending sell, and then you also have another one here as the pending. So while the price is in between here, the news is not approached yet. The news is yet to come out. So when it eventually comes out, it finds that you have a pending buy limit here and you have a pending sell stop here. So you have a pending buy stop and you have a pending sell stop here. So how you end this is, do not just enter the sell here and have your stop loss here and have a take profit somewhere very far away. No. That is the worst approach. What happens is, anytime you have a pending sell stop here and a pending buy stop here, you should have the stop loss here and the take profit and the stop loss here. That is, for the buy stop, you have your stop loss here. for the sell stop, you have your stop loss here. The take profit, you should trail it. That is, as the price moves your way, you drag the stop loss below price. So that way, if for example the news is very significant and it has a very big impact on the currency you're trading, and the price suddenly moves, spikes that direction, the stop loss will instantly follow it. So that way you'll earn way much more than if you're just having some fixed take profit, maybe at 10 pips or 20 pips or 30 pips, but you don't know exactly what the price is going to go up to. So you use trailing stops, that is trailing stop losses. You trail the stop losses. When the price moves your way, you start dragging the stop loss below it. So if it spikes instantly to your direction, you also drag the stop loss instantly in that direction, so that if it begins to pull back, you step out immediately. Does that make sense? So this is why I don't recommend you have some fixed take profit, because as much as you could be having a fixed take profit, the price may spike that direction. So if you had some small take profit here, it's going to be taken out, but you will have missed a lot of pips. So the only way to try to capture them is to ensure that you are having a very good trailing stop loss put in place, so that when the price moves that direction, you trail price following it. So something else, if you want to know that the news is actually significant, is you don't have to go to several sites to find out, going maybe to Forex Factor or whichever site you prefer. You don't have to go to all those sites to try to find the one to try to find like the correct news to be trading. You can see on the real chart that this news is going to be significant. And how you know is this: some hours just before news, you'll notice that the price begins to consolidate. That is, you will have a downtrend or maybe an uptrend prior, some 6 hours before news. Then just 1 hour to the news, the price begins to make moves like this. That is, there is no clear direction. It's not going up, it's not going down. It keeps just oscillating within some range. So what this would mean is, when you see this happening just before a major news, try as much as possible to locate the highest high you've had 1 hour to the news and the lowest low 1 hour to the news, and have your pending buy stop here and have your pending sell stop here, such that when the price suddenly spikes above, this spikes to us in this direction, when the news happens, you follow the trailing stop. When the price does the same thing, you follow it to the next trailing stop. So that's the best. That is the very best approach that I use so far for news trading. You have to have trades on both sides. If the first one is triggered, I don't delete the other one, because what normally happens is the price may go down, your take profit is hit, then the price again comes up again and breaks above this line, and the price continues in that direction. So if you removed the one of them, then you've missed out on that trade. So you have them. That is why you'll see every candle that do not let the price move like 20 pips, then you want to trail 20 pips, or you want the price to move, first of all move 20 pips and then you trail 15 pips. That is greed. You just have to step out when you're still in money, because the price is likely going to move your way just a few number of pips before eventually turning back to the other side. So thank you very much. That is my suggestion for the day. I hope you've got something out of it. Thank you very much. That should bring us to the end of today's webinar. We'll meet again next week at the same time. Thank you and see you.